Welcome everyone to the deep dive. Sometimes it feels like you're just swimming in financial information, right? So much stuff out there, headlines everywhere. It can honestly be pretty overwhelming. Well, today we're going to cut through some of that noise. We are taking a deep dive into understanding investment risk, and we're pulling some really fascinating insights from a key text. Investment risk, assessment and management. Many see it as the guide on this.
Yeah, our goal today really is to unpack what investment risk actually means. Look at its different types, its different forms, and crucially, how smart investors tend to approach it. It's all about giving you more clarity, maybe a bit more confidence too. Okay, let's get into it.
Yeah, and what's really interesting right off the bat in this text is how it shifts your thinking about risk.
How so?
Well, it's not just about, maybe losing money. It's framed more as the volatility of expected outcomes. The book really stresses that if you avoid risk altogether, you're probably avoiding returns too.
Ah, okay.
The real game is understanding how risk behaves, not just acknowledging it's there. So it's not this fixed, static thing then.
Not at all.
The author seems very clear on that. Risk isn't just a simple label you stick on something. It changes, right? Depending on the asset, what the market's doing, and your time frame especially.
Exactly. A short-term bet on some volatile stock, that's a totally different kind of risk profile compared to, say, a diversified portfolio you plan to hold for years, aiming for steady growth.
Makes sense.
And if you zoom out, you see risk is super dynamic. It often moves with the whole economic environment. The book does a great job breaking down these core risks, the ones every investor really has to get a handle on. And it's not just a list. It talks about how they're connected, how they show up, sometimes subtly. Market risk, credit risk, liquidity risk, and inflation risk.
Okay, let's dig into those a bit because the book gives them real nuance, doesn't it? Like market risk gets presented as more than just the market going up or down. The text pushes you to think about how it can reflect these bigger systemic shocks, when things you thought weren't related suddenly all move together, often at the worst time.
Precisely. And then there's credit risk. It's not simply, will someone pay me back? The book explores how one default, just one, can sometimes ripple out and cause wider problems through the whole financial system, like contagion.
Wow, okay.
Yeah, and liquidity risk. That's another one where the book makes a really vital distinction. It's not just, can I sell this quickly? The author really highlights how tied it is to systemic crises. Something that seems easy to sell in normal times can certainly become, well, completely stuck when the market freezes up.
Right, impossible to sell without taking a huge hit.
Exactly.
Right.
And then inflation risk. We all know it means your money buys less later.
Yeah, the silent killer.
Kind of. The book stresses how insidious it is, how it compounds, quietly eating away at your real returns. Especially tough if you're holding bonds or lots of cash long term.
Okay, so this raises a big question then. If we have this deeper understanding of risk, how do the smart investors, according to this text, actually deal with it? It's not magic, is it?
No, definitely not magic. The book lays out a pretty clear sort of multi-pronged approach. Smart investors rigorously assess risk, they intelligently diversify, and they actively manage it.
Assess, diversify, manage.
For assessment, it's about looking beyond just the standard volatility numbers. It pushes investors to think about fat tails, those really rare but massive market blowups, and understanding how different market conditions or regimes can completely change the risk picture.
So it's not just about the numbers, it's about picturing the extremes, how your investments might hold up under real stress. And diversification. Does the book offer anything beyond just don't put all your eggs in one basket?
Oh, absolutely. It really challenges that basic idea of just diversifying by asset class, like stocks, bonds, real estate. It argues true resilience comes from understanding and diversifying across correlation factors, how things move together or not, even within the same asset class. This can uncover hidden risks or maybe opportunities that people miss. It's about how your investments actually behave relative to each other in different economic weather, not just their labels.
That's a really powerful idea. Different. Okay, and then managing risk. What strategies does the book mention beyond, say, setting basic stop losses?
Well, for managing, the book really talks about a dynamic process. Things like tactical shifts in allocation based on how risky things seem at the time, maybe using derivatives for very specific hedging, discipline rebalancing, of course. But maybe more importantly, it stresses having a strong mental game, a good framework for making decisions when things are uncertain, and making sure your risk-taking actually lines up with your personal financial goals, not just chasing the highest possible return. It's about embedding resilience, really.
Fascinating stuff. Okay, so let's try and wrap this up. The core message from this deep dive seems to be investment risk isn't the enemy. It's not something to avoid completely, but something you really need to understand and manage strategically.
Exactly.
Knowing these types, market, credit, liquidity, inflation, not just their names, but how they actually work and interact. That's where the power is.
Precisely. And when you have that deeper understanding, you can approach your own financial decisions, well, with more clarity, more resilience. You move from being sort of scared of risk to being informed by it.
Yeah, absolutely. So what does this all mean for you listening? Here's maybe a final thought to chew on, building from this text. We know returns pretty much always involve taking some risk. So how might truly understanding these fundamental types of risk, really getting the nuances, change how you look at your entire long-term financial plan?
That's a great point. Not just your investments.
Right. Beyond the portfolio, does grasping risk deeply influence things like your career path, your savings habits, maybe even those big life decisions? Something to think about.